Mortgage rates just dipped again, and almost nobody's talking about why. But the reason matters because it could shape what happens in the housing market this spring. And if you're thinking about buying or selling a home in 2026, this is something you want to understand. Fresh inflation numbers came out for January, and for real estate, this was one of those quietly good reports. Overall inflation cooled to about 2.4%, down from December, and that's better than economists expected. But here's the part I really want you to hear. When inflation cools, pressure on mortgage rates eases. Not overnight, not dramatically, but enough to matter. And we saw that almost immediately. After this report, the 30-year fixed-rate mortgage dipped, landing just over 6%, hovering near the lowest levels we've seen in about 3 years. That may not sound exciting, but in real estate, small shifts move big decisions. One of the most important details in this report was housing costs, specifically rent. Rent inflation continues to slow, now running at about a 3% annual pace. That's important because housing costs feed directly into inflation. And when that cools, it gives the market breathing room. In simple terms, housing is no longer pushing inflation higher. It's actually helping calm things down. Now combine that with the stronger than expected jobs report earlier this week. That's a combo economists like to see. More people working, inflation easing, and mortgage rates slowly drifting lower, even before the Federal Reserve makes any move. That's what some economists are calling an incremental tailwind for housing. And incremental tailwinds matter, especially heading into spring. Now, let me be very clear. This isn't a victory lap. Home sales are still down, buyers are still cautious, and the Federal Reserve isn't rushing to cut rates. In fact, the Fed is likely waiting for more data from February and March before making any changes. And that's smart, because January data can be tricky. But here's the takeaway. The direction of the data is encouraging. Inflation isn't accelerating, mortgage rates aren't spiking, and affordability, while still tight, is slowly improving. That's exactly the kind of environment where buyers start paying attention again. And that brings me to something important. If inflation is cooling, rates are stabilizing, and buyer activity is beginning to stir, then the timing of when you buy matters more than ever. That's why I just released a video breaking down buying a home in winter versus spring, and the trade-offs most people completely overlook. Less competition versus more inventory, negotiation power versus choice, and how market momentum can work for you or against you. So if you're trying to decide when to make your move this year, go watch this video next. It ties perfectly into what we're seeing right now with inflation, rates, and buyer behavior. I'm Lucian Valancourt with Native Sun Realty.
Helping you find your place in the sun.